It's the most horrible time of the year. Time to get off your asses and calculate taxes, 'cause taxman is near. It should be the IRS that you fear. Yes, blockchain buddies and crypto comrades, it's time to start thinking about how to manage your crypto gains and losses from last year. And to help us sort through it all, we've got blockchain CPA Drew Kernosky along for the ride. We'll discuss crypto tax basics, loss harvesting, ICO taxation, tools to help you do the math, and how to not go to prison. So much fun. You'll be singing holiday tax songs along with us on episode number 229 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
Welcome to the Bad Crypto Podcast, the show for the crypto curious, the crypto serious, and those of you that traded in crypto last year. You got to pay your taxes, yo.
It is that time. You know, I believe you can start filing your taxes, on the 20th of January or something. There's like the early date, but the latest date you can do that, obviously, is April 15th. But there's the first date, and I know that's coming up here before you know it. So it is time to get your things together.
And, you know, you might not want to think about it, but you really need to. Please pay attention to this episode. Drew has done his research, and we're going to bring him on here in just a few minutes. But first, a shout out to our show sponsor. Who dat be? Dat be CoinPayments.net, founded in 2013 as the first altcoin payment processor offering support for both Ethereum and Litecoin payments. They have now grown to support over 1,100 coins and tokens. They got a global user base of over 2.3 million businesses and users in about 182 different countries. They have facilitated over 1.5 billion in crypto transactions, and they've got a bunch of cool pre-built plugins and integrations for all the major e-commerce platforms. So whether you're using Shopify, Magento, WooCommerce, they've got the APIs for custom integration. They've got hosted wallets, conversion and fiat settlement functionality, and these guys at Coin Payments lead the way in furthering adoption of cryptocurrencies. If you're a merchant and you want to take crypto payments of over 1,100 different flavors, coinpayments.net, and tell them Bad Crypto sent yas.
Yeah, it's pretty cool. You can actually take cryptos and you can hold the cryptos and hodl them and they can grow, or you can immediately convert them over to a stable coin, which I think is a pretty fantastic feature. We don't have to worry about that volatility.
Hodl me, Travis. Hodl me.
Okay, baby. It's cold outside.
Let's get to our interview with Drew Kernosky. It's that time of the year again, folks. That time of the year where we have to broach a topic that we approach apprehensively because nobody likes to talk about taxes except for CPAs.
Talking taxes with Travis and Joe's.
Oh, hello, Mr. Travis Wright. This is going to be super interesting because out of all the interviews that we do, this one in the content within applies to everybody that does anything in the crypto space.
Yes, if you're in the crypto world, you have probably maybe traded some cryptos, or maybe you've gotten paid in cryptos, or, you know, maybe you are just hodling your cryptos. And so maybe you don't have any tax events if you're just hodling, but maybe you bought some cryptos and then the price of cryptos went way down and then you sold the cryptos. And so maybe you have some losses. And so there might be some ways if you had, depending on what you had did in your crypto portfolio, there might be some really good advice in this podcast for you.
And there are many CPAs in the world, but it turns out that not too many of them really understand this whole crypto world yet. And so there are a lot of people that are either not reporting their crypto gains or underreporting or misreporting, and there's a lot of confusion, which is why I'm glad we have Drew Kernosky with us. Drew is with the Archer Tax Group. They're one of the leading voices in tax planning surrounding cryptocurrencies. They specialize in tax mitigation, planning for ICOs and STOs, not STDs. Also, business integration of cryptocurrency and blockchain. They advise individuals, both foreign and domestic, with helping ICOs plan their tax strategy across internal borders. Drew, welcome to Bad Crypto.
Well, hey, thanks.
Okay, tell us everything we need to know. Ready? Go.
All right. Well, first of all, right now, if you haven't harvested loss, you kind of missed the boat a little bit. It was something that you had to do before the end of the year. And I think, if we were to sum up 2018 kind of in one blurb, it's loss harvesting.
It hurts. It hurts me so bad in my cryptos.
Oh, for sure. Well, and honestly, I mean, it's just one of those things that even still, if you didn't have massive gains to offset, and I think I had quite a few clients actually that, they sold at the peak in January, bought back in March, wrote it down, sold a little bit off, and kind of chipped away at that huge balance. But, some people are in a situation where it doesn't even make sense to loss harvest because you're basically resetting your counter for long-term capital gains. So it as if, with everything in taxes, everything is always the answer. Well, it depends. Depending on your circumstances, sometimes a move makes a lot of sense. Sometimes it doesn't. It's just one of those things that as we take a look and see, the IRS is slowly catching up. They've put out one notice back in 2014, and that's really the only official guidance that we've gotten from them.
And what does that say? Why don't we start there, certainly. And then let's define some of the terms for those that really, I don't like to pay attention to all this. I just hand the stuff to my CPA and say, do my taxes.
Yeah, certainly. So with that, the notice is 2014-21. And what that basically outlines is cryptocurrency is treated as property for tax purposes. So that means if you're buying for investment and selling, if you buy at $100 and you sell for $150, you're going to have a $50 capital gain. If it's sold within a year, you're going to pay short-term capital gains taxes on that capital gain. If it's sold 1 year and 1 day, now you're in the long-term bracket, which can be anywhere from 0 to 20%. The other thing that it really outlines too is, if you get paid in crypto, what's the treatment for that? And that's really stipulated as if, think about being paid in gold or any other kind of tangible property, you recognize the fair market value at the time as gross income, subtract out your expenses, and then pay income and potentially self-employment tax on it.
Hey, Drew, let me interrupt you for just a moment, because just by the way, for listeners, of course, we are talking about the United States Internal Revenue Service and tax law. And for those of you that are, our foreign listeners, you're going to need to check with your local authorities to find out how the tax law applies to you.
Certainly. And we've worked with a couple Canadians as well. And they've got a completely different capital gains calculation structure where they don't differentiate between long and short-term capital gains. They say take 50% of it and then multiply by the basic tax rate, and that's what you pay. So it's amazing, the different jurisdictions as well. If you're a U.S. citizen living abroad, you might be subject to that country's tax structures, or you might still owe tax back to the United States as well. It just really depends on the specific country that you're in. So yeah, every country's got their own rules, and they're all trying to figure it out and try. Some of them are jockeying for position to be the best tax haven, if you will. Places like Malta. Your traditional ones like Hong Kong and British Virgin Islands, the Caribbean tends to be pretty tax friendly as well.
I want to ask a question around this. So you talked about loss harvesting, and we've had conversations internally about this. Now, is that something that, first of all, explain what that means? Because for some people are going, what does that mean? It's pretty intuitive. I think most people will figure it out. But then, is that something that most countries are accepting as a tactic? Because people are. I mean, I know that I had some pretty big instances where I was buying $2 and $3 and $4, coins that are now worth 9 cents.
Right.
And that was not awesome. I mean, I lost my ass on a lot of that stuff. And so is that a tactic or a strategy that's available mostly worldwide?
Yeah. So most countries will recognize that. The U.S. is unique in that it caps the capital loss. So when we talk about taxes, you've got capital gains tax and you've got ordinary income tax. And ordinary income is anything, self-employment, W-2 job, other income, things along those lines. That if you've got capital loss, you can only take $3,000 of capital loss in excess of your capital gains. So if you had capital gains of, say you got lucky and cashed out in January, $100,000, and then throughout the year, you've lost essentially the value of $150,000 and you've harvested that. You sold the tokens, you recognize the loss. It's not just tokens that you're holding. You can only recognize $3,000 against, maybe $50,000 worth of ordinary income from your W-2 day job, and the rest will wipe the balance of your capital gains of $100,000. So then you'll have $47,000 of loss left, and that will carry forward into the next year against other capital gains. So in a lot of cases, if you're holding those down coins, your 9-cent tokens, Travis, if you think they're going to come back up, sometimes it doesn't make sense to harvest that loss, because all you're doing is resetting your basis at a lower point that you're going to have to pay more capital gains on. So unless you have a bunch of tokens that you won on earlier in the year, or you've been, BitMEX trading like a fiend and have a ton of capital gains there, then it doesn't necessarily make sense to harvest that loss. And there's a couple states too, like Pennsylvania, that they only let you take that loss for 1 year and they don't carry it forward, and they still cap it. So you can really set yourself up in a really poor position.
Well, I don't want to name any names, Dragon Chain. I really should have got out in January. I mean, we're talking about $250,000 when it was $5 a coin. Now it's 9 cents.
Oh, yeah.
And that was a big, sad Travis.
I spent the last week of the year really looking at my portfolio and saying, what do I think is a winner? What do I think is a loser? And just rebalancing my portfolio just to harvest that loss. I think we ended up harvesting about $21,000 of capital loss in our own portfolios here.
That whole Dragon Chain thing was a travesty.
It was.
Yeah.
Well, once the SEC started getting in there and started bullying him and saying, hey, blah, 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 because it was poised to basically be the IPO, platform for the U.S. And then the SEC came in and was like, no. And then all of a sudden.
I have family that was hyping on Dragon Coin that was really pushing me to invest in it. I was hyping my own, shitcoin essentially, and we were both wrong. It's amazing how much that, even a little bit of regulation and enforcement by the SEC can tank a project. I mean, look at, was it Paragon Coin even got slapped on the wrist by the SEC, and it took a nosedive immediately after that leaked.
Yeah. Whoever got out in January and just stayed out the whole year, genius.
Charlie
Right.
Lee.
Like he was.
Actually, he got out in like November, I think.
Yeah.
So what is this terminology about like-kind exchange, and how does that apply to crypto?
Ooh, this is my favorite question, because this is how I kind of got my start in cryptocurrency, and have been arguing with people on Reddit for about 2 years now about like.
Why you got to argue, Drew? Don't be.
It's not arguing if you've got all of the facts and statutes. Now I'm just waiting.
He's the tax troll.
Right. Hey, I'm just trying to help people out. I hate paying any more money to the government than is legally necessary. And if you are wrong about like-kind exchange and you lose, you're looking at what's called a substantial understatement penalty, which is 20% on top of the balance that you owe, plus other penalties and interest. So for me, I am a big believer in, not necessarily rolling over and taking the easiest, most safe path. I believe in having supporting documentation for any position that I take. So circling back to like-kind exchange on that, when you look at the breakdown for what is explicitly excluded from like-kind exchange, there's about 8 different things, things like inventory in use of a business, securities and other notes, things that tend to line more up with what cryptocurrency is. And there's a couple different revenue rulings as well from the 80s that really talk about, can you trade gold for silver? And when I start to think about, what is the most tangible item that we can use if we're going to be sitting in front of a federal, judge in tax court that probably has never even touched a Bitcoin or, has any idea who Satoshi is, how are we going to explain it and articulate this case? And if the IRS,
I don't know that I've ever touched a Bitcoin either. I thought they were
fair. You got me there. Travis, I'm going to make you my new intern.
Okay. Very nice.
With that, there are several statutes that don't allow you to trade, gold for silver or other precious metals. The only time that you can invoke like-kind exchange when it comes to precious metals is if you're going from gold bullion to gold coins of the same purity that are both domestic. So you can't be trading a gold bar for gold Cougarans and expect to invoke like-kind exchange. So when we look at that and we start to compare, well, what is, Bitcoin to Ethereum? What is Litecoin to Ethereum? What is Dragon Chain to Ethereum, and even some of these foreign coins, I don't really see a way that is going to make a lot of sense for, a judge to be on the side of crypto that's like-kind. And the other caveat that people don't realize with like-kind exchange, it's not like the Michael Scott, The Office, where you can just run around and scream, I declare like-kind exchange, I declare bankruptcy. you actually have to file quite a bit of paperwork for every individual transaction. And 99.9% of the people that I talk to that are insistent on like-kind exchange are not filing that form. And with that, I mean, if you're talking 2,000 to 3,000 trades, you're talking about quite a few of those forms to go in with your tax return. So your tax return would be, I mean, massive, and most tax preparers aren't going to prepare that. Now, you could maybe make an argument that a forked token like Bitcoin to BCH could be considered, but you would have to actually fill out that form for like-kind exchange. And honestly, after 2017 tax year closed, there's no longer like-kind exchange for anything that's non-real estate.
So I want to follow up on that then. So why is it if I have, let's see, 10 ounce bar gold, and I want to switch it out for 10 Cougar Rands, or maybe I want to get 5, the 5 British gold coins and 5 Austrian gold coins or whatever. Why is that a difference? Is it because they're a foreign national currency officially, but it's still gold? So what difference does it make?
So it's not necessarily talking about was the numismatic or whatever the technical term is for currency minted in gold. We're talking, gold bars to gold coins. The main reason why it's domestic only, and all tax law typically points to who's the special interest group and how does this benefit the United States specifically. They want to maintain U.S. gold supremacy, not looking at other countries. So it's about offshore.
But those other coins are so cool, though. It's like I know. I don't just want gold. I don't want gold U.S. coins. I want to get a sampling of cool coins from all over.
It's goldist. Why do they have to be gold supremacists?
I'm more of a silver maximalist anyways, but
which, by the way, I just noticed, I hadn't looked in a month or so, but gold and silver both have gone up a little bit here over the past month.
I might have to buy a little bit more gold, and this is not investment advice for anyone who's listening, so don't ever try to pin this back on me in any way, shape, or form, any regulatory body. The more that we get into crazy political seasons, I think that, buying gold in the short term and just kind of swapping it after, political season ends, depending on who takes office, might not be a bad investment strategy. Everyone is so torn up about all different news stories for any given reason, and everyone thinks that the world is ending. Why not play on that chaos?
It's not. We're not all done. It's not over.
Oh, I thought we were supposed to die after the tax law updates, because that was supposed to be, the end of all living things. And I'm still here. There's another tax season coming up. So I'm happy.
You know what's crazy about that? I want to throw this in here because it lends itself to this story right here. So, back when the price of Bitcoin was really high, I bought I traded out and got some gold coins. Mm-hmm. And then I sold, I think, I sold 4 gold coins, and I got the dude, he's had this store for 30 years. And so he wrote me a check. I'm like, this dude's been here for 30 years. I trust the guy to write a check. Put the check in my bank. The check bounces. Then that causes, because I don't normally keep a lot of money in that account. And so then that caused some issues. And so I had to go back to the dude, write me a new check. Then I had to go to his bank, cash the check. And then, so now I got $4,500 or $5,000 in cash. And then I take it to my bank to deposit, right? And then here I am going, oh my God, I got $5,000 in cash on me. Like, what happens if I get robbed? And then you're literally thinking, like, and this whole process took me like an hour and a half to go from this bank to that, to do this, to do that. And I'm like, dude, just like sell me crypto, right? Like buy my gold for crypto. Like, I've not seen any stores in anywhere. And I've looked, gold to crypto, come down and, it's gold to cash.
Remember those cash for gold commercials? Crypto for gold, mm-hmm. Right?
They need that. We need that seriously. I'd be like, I got okay, I got it. Good. I'm going.
Well,
man, it was such a
we've hit peak crypto when you start seeing those cash out your annuity for Bitcoin commercials on TV. Those are the ones I miss of the financial bygone era.
So let's talk a little bit more about some of the basics surrounding crypto, because you've got some different accounting methods that you can use for this. Your FIFO, your LIFO, your NIFO.
Well, and I mean, you're really not limited to any kind of accounting methodology. You can even do what's known as specific selection, which, I mean, we can say, I am trading this Bitcoin at this price that I purchased back in March. This is when I sold it here in November. So the only thing that I wouldn't recommend utilizing is cost averaging. And the main reason why is that is an accounting method specifically for stocks and other, mutual funds, things along those lines, I would be very, very cautious about doing that. And that's one of those things, once again, we try not to take unnecessary risk, but we're not going to just take FIFO and say FIFO is the way to go. I've had too many clients come to me after talking to their old CPA and saying, look, they are only looking to do FIFO. They want to do this as cleanly as possible. But if I do that versus LIFO, I'm going to end up owing a significant amount of money.
So let's be clear, FIFO means first in, first out. LIFO is last in, first out.
Correct. And you can do highest price first out. You can do closest to sale, or like I said, specific identification as well. And there's a lot of different software systems that will help you kind of navigate that process. I mean, if you're talking multiple exchanges over multiple months, over thousands of transactions, it can be kind of, a pain in the butt to try and do that with just the raw data. I've used Bitcoin.tax in the past. Token tax seems to be an up and coming star. I have seen that they do offer the FBAR side of things, which most companies don't as far as the accounting goes. And there's another one that's working well too, that's trying to actually, look at some additional savings in looking at what the market price actually is. So if you're trading on a decentralized exchange, how do you figure out what the actual USD value of your crypto is? Do you go to CoinMarketCap and try and grab that specific time slot? Can you average it across exchanges? As long as you are holding a consistent accounting methodology and you can prove your work, you've got a pretty strong case for whatever pricing you've got, as long as it's not too far off the standard norm. You can't claim, well, hey, Bitcoin was selling at $1,000 on this random exchange that has sold 0.0001 Bitcoin of volume in the day, versus looking at Binance and saying, well, it was at 1,500 for the day. So you have to be reasonable, but there's some savings in looking at how you're actually pricing your cryptocurrencies as well. And the only service that I've seen that's been doing that is Crypto Counting, and they're trying to kind of break into the market. They're a new up and coming company.
And so, just for clarification again, FIFO first in, first out. LIFO last in, last out. WIFO takes half whenever she's out. So, WIFO
you should have warned Bezos.
Yeah. How about that for some capital losses?
Oh my gosh.
So yeah. What about crypto-backed loans? Because I know that's been one of those big things that people have been talking about as something that's valuable. Like, I don't necessarily want to sell my Bitcoin, but if I can maybe get a loan for it or so, like, how does that work? And how does that, if I do get a crypto-backed loan, what are the tax implications?
Yeah, certainly. So this was actually a passion project of mine. Mid 2017, I was convinced that I was going to do my own ICO around this specific issue. The idea being, just at a super high level, a crypto-backed loan is not considered a sale. Think of it kind of like a mortgage. You're not selling your house. You're using the house as collateral to pull money against it. So in that case, I mean, if you think that we've kind of hit the bottom, and I've seen a lot of people panic about the price slides, because then you have to basically get your loan in compliance. Otherwise, they essentially foreclose the loan and take the assets. As long as your loan doesn't get seized, there's no tax implications. And if you're running it through a business, the interest that you pay on the crypto-backed loan, if they're business assets, you can actually write off the interest as a business expense.
Okay, so timelines are super important when we're talking taxes. Certainly. Because the IRS likes you to have your return filed by a certain day. Of course, we've already missed the ability to harvest losses. If you didn't sell for losses by December 31st at midnight, then you're out on that. But what are some of the other things we need to know about a schedule?
Certainly. So if you've got any kind of corporate entity, partnerships, C Corps, S Corps, that would all be on March 15th is the filing deadline or extension deadline. And then for individuals, it's actually April 15th this year. In the past, they've moved it because of federal holidays in DC, where it's been April 17th. But this year is April 15th to file that, either your 1040 individual return or an extension. And one thing to remember too is if you're going to file an extension, if you've got the ability to pay what you think you might owe, you can actually avoid some penalties by paying with that extension. Or if you've got no priors on your account, you've been in compliance for the last 3 years, they'll waive most of the penalties surrounding an extension. The only one being is if you didn't prepay estimated taxes by January 15th. That's the last date to pay estimated taxes for the year.
I have a question then around, because here you're on all these different exchanges. Mm-hmm. I don't know. I think I'm probably on 15 different exchanges because it depends on like, oh, I want to sell this token or I want to buy this token. It's only available over here. Now I got to go get an account over here. And now I got that, and I've made a couple trades here, and I've moved this over here. I don't do a whole lot of trading, but if I want to, go get one of these coins, I got to go and log into this new account and buy a new, or got to get this new account. So how does that work? Like, what are some of the tools to help sort through some of this just huge mess? Because I know that you can export, the trades and stuff that you've done, but is there a recommended tool that you like the most that says, hey, this keeps everything organized effectively?
I think it just depends on the amount of volume. If we're talking a handful of exchanges here and there, I love Excel. Just logging the coins sent to the exchange, what you traded them for, and the actual transaction data. Most of the exchanges will at least have sometimes a 3-month rolling account information. Really, you only need the trading data. Anytime that you move your own crypto to your own wallet does not constitute a tax event. But if you've got any kind of fees or things like that, you can add that back into the basis. So if you're moving from exchange to exchange quite a bit, it's probably a pretty good idea to grab that basis information. But overall, trying to stick to some of the more established exchanges that will have that data as a customer service would probably help sort that out. But I mean, there are some things that you can only get on, Cryptopias or decentralized exchanges, things like that you're just going to have to keep your own records. And I really highly recommend Excel. I do have a spreadsheet. So if anyone wants that, Travis, if you want me to send that to you, I'm happy to send you this template spreadsheet that you can at least log those transactions.
I would say this, maybe send that over to us and we will include it in the show notes in this particular episode, and make sure that you put your compliments of Drew, and that'll be good. Helpful.
Absolutely. We've got a whole page of downloadable templates for people to utilize for all sorts of different crypto transactions.
There's plenty of people in the business of crypto that have gotten paid in crypto, as contractors for services, advisory. How do you manage all this?
Yeah. So with that, I mean, once again, records are key. Having invoices and being able to match them to crypto transactions will save a lot of headaches. So I've got quite a few clients that aren't ICOs, but are, I would consider crypto adjacent businesses that are either, web designers or marketing people, that we have to track what crypto they receive, how much it was worth when they received it, in order to figure out that gross income, kind of like we talked about from the notice. And then from there, it just becomes a traditional, accounting, if you will. We literally take the same expenses, try to figure out, and no matter whether the business is profitable or not, that crypto, whatever the fair market value that you received it at, that becomes its basis. So there's some cases where a business is just breaking even, that if they get paid in crypto, they can actually collect additional money without having to essentially pay any tax on it, because they've got the fair market value. So it's amazing how beneficial crypto can be for a business, but a lot of businesses are really scared to take on the risk of, dramatic price changes, and there's plenty of stable coins out there now that are easy enough to transact with, that would solve that issue, almost immediately. But we're seeing a lot of startups here in the Denver area specifically that are working to help businesses, create a seamless payment platform that'll either cash out or at least have the records for them that they can either then give to me or, another accountant that can help them kind of suss out the planning around the crypto
Everybody
side.
Be sussing.
Now let's talk a little bit about this, because now let's say, I know a lot of what you're doing is you're helping the individual investors, the individual crypto consumers, right? What about folks that have maybe run an ICO or they're doing an STO? What are some of the taxation? Did you deal with any of that, the taxation with those types of things? Because it seems to me they've raised a lot of money, that if they held their cryptos for too long, maybe they lost a lot of money. Like, what are some advice that you might give folks who did an ICO in 2018 or are doing a STO in 2019?
Yeah, so I mean that's actually been a pretty big developing part of our business. We've been getting pulled into more and more ICO, STO projects because they want to know that before they even raise the tokens. So that really boils down to, are we talking a utility token or are we talking an STO? Because those companies that have those STOs, generally speaking, it runs almost like a capital raise through stock, where they're not going to recognize that as income. It's just going to be, equity on their balance sheet. And then they've got the associated assets that come with that. Now, if you're looking at a utility token, and there's been so many different cases that have kind of unwound the utility token argument. So obviously talk to any qualified attorney about that before you decide that you're going to do your own utility token launch. But one thing that people don't realize is selling a utility token is just like selling any other product. you're going to have to recognize that as income, subtract out your expenses, and then calculate the potential income tax on that. And after the Wayfair versus South Dakota Supreme Court case of last year, depending on which states you're operating in, you want to make sure you know where your customers are located. Because if you're selling them tokens that are essentially software as a service, there are 13 different states in the United States that will actually charge sales tax on that software as a service. So if you raise $30 million and you didn't put money aside for sales tax, for the income tax, you could potentially have both the federal government and different state jurisdictions jockeying for who gets control of those tax dollars. And if you don't have records to prove it, you're going to be fighting an uphill battle. So there are so many different things that have kind of come up with the STO issue. We've seen a couple companies that raise their tokens through a offshore company and then want to try and figure out a way that they bring that money back to a US-based development company. There's all sorts of hoops that you have to jump through there and things that you have to do to be cautious to not recognize that as revenue. And 9 times out of 10, if you're thinking that you're being sneaky by giving a loan from your foreign company to your US company with no interest, with no intent to repay and no promissory note, and it's really just a loan in name only, the IRS can and has gone back and unwound loans and said this is actually income. You need to recognize it as income and it's subject to US taxes. So you have to be very, very cautious if you're thinking about doing a token raise, how you're going to go about that.
It's such a mess. And let's face it, the IRS is still getting up to speed on it. A ton of CPAs really have no idea yet. Are we facing a reporting crisis, over the next few years as the laws might shift and change and IRS starts auditing? Is it going to get crazy?
I think it will. The IRS has been dropping hints for the last year and a half, honestly, that they're going to start enforcement. There was one note that they put out of, these are the 5 focus areas that we're really going to dig into this year. And I think number 3 on that list, or number 2 on that list, was virtual currencies, which is the IRS nomenclature for crypto. And in that little blurb, they said, at this time, the IRS is not considering any sort of amnesty program for cryptocurrencies. So they're going to come fast, and I say fast, and we're talking government fast. So probably another year or 2 before we see any major enforcement action. But anyone that thinks that, this immutable public blockchain that we're all doing transactions on, that you're somehow going to be cute by being able to hide that. Now, I'm not talking about privacy coins. I always get the counter, well, what about Monero? Well, Monero still has a fiat on-ramp and off-ramp typically for other cryptos. That's not necessarily guaranteed that you're going to hide from that. And it's just like being a criminal in any other capacity. If you have a $500,000 car in your driveway but claim $2 on your tax return, the feds are going to have questions. I mean, that's how they got Capone. But honestly, I think there's going to be some reporting issues, and there's going to be a very big need for qualified tax professionals, both that understand how to settle with the IRS and both that understand how to actually put together crypto records. So I've got quite a few clients actually that come from the 2012 era that we actually went back and filed a bunch of amended returns, filed a bunch of FBAR disclosures, things along those lines in order to get them back up to speed to make sure that they were fully compliant. So when they cashed out in 2017, they were good to go. That way there's no other, long offset paper trail that the IRS is going to come knocking on their door about and trying to audit proof them as much as possible.
You mentioned, Drew, using Excel to track your cryptos, but there's, many of the exchanges offer the ability to download a spreadsheet. And I know that there's some tools out there. One of them I've seen is cointracking.info that lets you import your spreadsheets and it kind of does the calculations for you. Could you put some meat on that, please?
Yeah, certainly. So there's quite a few different companies out there. There's a wide variety of prices, a wide variety of services. A lot of them do API integrations, even that you have a view-only API key that you sync that up, and it works really well with your Coinbases and your traditional exchanges. In some situations, you really need to pull those records and manually upload them. But I've used personally Bitcoin.tax in the past. I've got clients that use CoinTracker.io. I think there's one CoinTracker.info, the token tax. I think there's probably now about 20 or 30 different services. Really take a look at them, and most offer, at least a free trial. So I would highly, highly recommend, trying them out and seeing what works and what makes it easiest for you, and even compare them. If it's only $30 or $50 to try, that's not too much of a cost for you to actually verify the numbers cross platforms.
Great stuff, Drew. So let me ask you this then. What, before we wrap this thing up here, what are maybe some final words of wisdom or just some general guidelines or some things that the folks need to be thinking about as they begin to prepare for April 15th or whatever date is in their country?
Yeah, certainly. So I think the biggest thing is really just get your records as together as possible. From a tax preparer perspective, it's easier for you to send me everything at once than to kind of, send it in one at a time. The sooner you get it into your tax preparer, the more time they can devote to that return. If you send it to them on April 14th, you're kind of tying your hands and you're probably going to end up filing an extension. So even though you can't file your return electronically as an individual until the 28th of January, doesn't mean that we can't be working on those crypto records right now and getting that all put together and figured out. The other thing too is, if you're a small business and you've got profit, look at doing what's called a SEP, SEP IRA, and taking some of that profit and actually putting it into a retirement account. There's a number of different ways that you can actually invest in cryptos through a self-managed IRA, but that SEP allows you to make contributions for 2018 all the way until April 15th of 2019. So it's a great way to pick up a last-minute tax deduction for those that need to basically shelter some of that profit.
Well, I guess I do have one final question. Do you by chance have a time machine so I can go back to January 7th, 2018 and sell a bunch of
we're actually putting together an ICO to fund time travel. We're going to go back to 2014. Man. I need your email address at the time so we can tell you to buy all of the tokens, and then we'll send you another email on January of 2018 to sell everything as well.
Oh man, that is really handy. The time coin.
Drew Kernosky with Archer Tax Group. There's a bunch of links that you guys can find in the show notes to archertaxgroup.com. Keys.casa. What is that? What's Keys.casa?
So Casa is one of those service providers that we've really liked a lot. I've seen a bunch of different articles posted and pictures posted about the Gemini security and all that kind of stuff, and them really pushing for regulated exchange. Casa actually helps you secure your own cryptocurrencies at home without having to worry about having them on an exchange. I'm not a big fan of leaving tokens on an exchange if at all possible. Casa really helps in securing those tokens and basically letting you run your own node from home.
Right on. Well, we appreciate you coming on. Hope you guys have gotten value from this today. Pay your taxes. Pay your taxes. There you have it. Pay your taxes. Just pay the taxes. And you don't want to be getting in trouble. And now you've got the information that you need. And, there might be changes in the future. There probably will be changes to the tax law. But I think we are all liable for the law in the year that it applied.
I think it's probably changed since we did this show. I mean, it's hard to say.
No, it hasn't. It hasn't changed since 2014, according to Drew. So I think we're good. I think that what we've got now is actual financial advice from a certified public accountant and his team at archertaxgroup.com.
So this is pretty momentous. This is like the second podcast ever where we've actually had real financial advice.
What, do we not count the 8 episodes with he whom we do not name?
Well, he was not a licensed financial advisor.
No, he was not. And hope all is doing well there. You know what? I'm going to give a quick tease.
Voldemort? Are you talking about Voldemort?
Yeah, Voldemort. I'm going to give a quick tease for something that we've got going on, Travis, for those who are going to South by Southwest in Austin. If you were there last year, then you may recall that there was a bad crypto meetup that took place. Mr. Travis Wright and I got to speak to the audience a little bit, and we didn't really do a show there, but we got to hang out with y'all, and it was a packed house. Well, it is happening again. Brian Mennel of Veramos is putting it on Saturday, March 9th in a location still to be disclosed, and it's called the Bad Crypto Meetup Hard Fork, and we're going to be there.
It's the Bad Crypto Meetup Hard Fork. Come and meet Travis Wright and Joel Com.
Exactly. That's how we're going to promote it as well. We might, if we can work it out, we might do a live podcast previous to the meetup, where we only let like 50 people in so that we can actually do a show, because it's going to be at a bar and it's going to be loud. And if we can pull this off where they can get us the space for that extra hour to do a show, some of you, it'll be first come, first serve, I think, for those that'll be able to attend the show. But more details on that forthcoming. And I don't even.
I think we need to maybe do that while we're at South by Southwest because we're going to be in a bar. Maybe we do it after the party where we're all drunk. Like drunk history. Drunk history cracks me up. It's really hilarious.
It could be really bad crypto meetup.
Yeah.
The drunk crypto meetup. Hey, Travis, you don't know what you're talking about with your coins. You don't know.
Yeah, I get really loud when I'm drunk, even louder.
You don't know. Something else.
Can you turn down your mic, Travis? It's really loud. I'm like, I'm not using a mic.
Watch the Bad Crypto feed this week as well, because we're going to drop the first episode of the Bad Boys of Tech on you when you least expect it. You're going to be like tuning into the Bad Crypto podcast, and boom, this new show is going to fall on your head and squish you like a bug.
Bad boys.
What you gonna do? And the reason we're doing it is because we need more British on this, on our podcast, and so Stuart Rogers is going to bring that.
Yeah, people were saying, your Bad Crypto is not enough. And we said, you need to add a British person to it. We said, well, we're not going to do that, but we'll spin it off. We're going to actually fork. We're forking Bad Crypto into a tech show.
Well, actually, we've already forked once. We forked to the Crypto Chick with Rachel Wolfson, and hopefully you guys have gone and subscribed to her show because she's actually smarter than both of us.
Combined times 10.
Yeah, so go subscribe to the Crypto Chick, and of course, be sure to review, favorite, follow, and do all the things that would serve the expansion of the Bad Crypto message to the world. We appreciate you guys, and Mr. Travis Wright has your official marching orders as you go into your week.
Stay bad and stuff. Ugh.
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor. How was that?
Very nice.
Okay.
Who's bad?
What does your morning sound like?
That's Daddy's little man.
Morning, Daddy. Grabbed your usual from Mickey D's.
Here's to making your morning routine a little better with a delicious breakfast from McDonald's.
Start your day at McDonald's with a refreshingly bold, large McCafe iced coffee for just $2. Price and participation may vary for a limited time. Cannot be combined with any other offer or any combo meal.